Hey everybody, it's Greg Skogsberg at TWH. It's newsletter time, April 2025. The first quarter is already in the books. It's only 7 months until I get to put up my Christmas tree again. Hey, I've got the perfect strategy. When you're talking to somebody and the conversation's not going well, they're trying to brush you off. I'm happy with my current advisor. I don't really like annuities. I've got plenty of life insurance. Try this. Do you have any assets that will let you defer your required minimum distributions on your IRA funds up to age 85? Stops them dead in their tracks every time. And I always get this response, what? And they want to hear it again. So there's an annuity out there, a very special kind of annuity. There's only 5 companies out there that offer them, and they're called Qualified Longevity Annuity Contracts, or QLACs. And they're designed specifically for lifetime income, but you don't have to start it until you're age 85. You can only put IRA funds in there. You can only put up to $210,000 into it, which is not a big problem, but they've never heard of it before. And I've set more appointments and made more sales because of that statement, and it gets them interested. And they say something about it, well, I'm really happy with my advisor. It's like, well, why didn't your advisor tell you about this strategy? Do you want to take your required minimum distributions when you're 73, 74, 75, depends on when they were born. And a lot of people with a ton of money say, no, I don't want to take the required minimum distributions. I'm going to leave the money to my children. Like, well, this would let you defer that. Here's the cool part. So you can only put $210,000 into this QLAC per person. So $420,000 per couple if they have that much in their IRAs. I've met people with $4 million in their IRA funds. If, let's say, a person has $500,000, they can only put $210,000 into this QLAC. It defers the required minimum distributions up to age 85. Well, on the rest of the IRA money, when it comes time for them to take the required minimum distributions, they don't have to use the $210,000 in the QLAC annuity as part of that calculation. So their entire required minimum distribution amount, even when they turn 73, 74, 75, is going to be lower. It gets a conversation going when nothing else is going to work. It's also just a great conversation starter. If you don't know this person and what do you do for a living? Like, I help people improve their retirements and have more money to spend in their lifetime. How do you do that? Well, one of the ways I do it is I help them defer their required minimum distributions until they're 85. Like, what? How do you do that? And they want to talk. I don't care if you're on the golf course, on a plane, in the post office, or wherever you happen to be having this conversation. It is the number one conversation starter I've ever used, or conversation strategy I've ever used, that sets appointments. More appointments than anything else I've ever tried, because no one's ever heard of it. Give us a call. We can give you illustrations, give you more details, and you earn a commission on it, man. And I tell you, this extra added benefit, it has led to more indexed annuity sales on regular funds than the actual number of QLACs that we've done, even all of our agents. The QLAC will get you in the door and get you to sit down with the people, and then you can talk to them about guaranteed lifetime income and eliminating market risk and long-term care advantages and all of the different things that annuities can do. Typically, when we start having the conversation, we end up doing something else, and even usually bigger than $210,000. But keep this QLAC in the back of your pocket, and because it's April, it's tax time. I know April 15th is coming up here pretty quickly, or maybe it's already gone by the time you see this video. But people think about their taxes and all of their finances more this time of year, for 2 months leading up to taxes and for about a month afterwards. They're focused on their entire financial picture, whether they owed money or they got money back. They just got a comprehensive look at all of their assets and the tax implications around those. But then the older people get, the more this weighs on their mind, because it gives them a clearer picture to what retirement might look like based on the assets they have right now. With the market as volatile as it is right now, and the uncertainty of the markets going forward with the current world and economic environment, people are even more obsessed with thinking about their assets and their retirement and their finances right now than ever. So there are a lot of different things that you can do to help them with that. One is life insurance. We have several tax planners that also have life insurance licenses, and they're typically in our top 10 producers every single year. And all they do is, when they're talking with someone about their taxes throughout the entire year, they'll bring up annuities and say, well, Tom, I see you have an awful lot of money still in the market and you did pretty bad last year. Take some of that money off the table, especially now that the market's down. Or even if they've done well, get some of those winnings off the table and out of harm's way before the next bump in the road comes. Come on, Tom, you're 71 years old. Do you still want to have 85% of your money in mutual funds right now? It doesn't make sense. We also see tax advisors and tax planners do an awful lot of life insurance because they can see that the clients are underinsured. Like, well, Tom, I did your taxes this year and you're worth $250,000 more than you were last year. How much life insurance do you have on hand? And almost everybody is underinsured. It's staggering how many Americans don't have enough life insurance. So whether it's another $500,000 in just a term policy or something that could build up a cash accumulation. And if they're getting older, over the age of 60, 65, if we can get them into something that has long-term care benefits built into the life insurance policy, that is a double win. But think about it, because right now, that's on people's minds. Another thing is just annuities in general, lifetime income streams, guaranteed lifetime income. People just paid income taxes if they're still working, or even if they're not working, they're paying income tax on their Social Security. So this is a great time to offer them a guaranteed lifetime income stream they can't outlive and shift some of that money around. Oh, another life insurance strategy is sometimes you meet people that are overinsured. They bought $10 million worth of life insurance and now the houses are all paid off, the kids are out of college, the grandkids are fine. They don't need that much money anymore. Transfer some of that cash value out of that life insurance policy and put it into a long-term care policy or an indexed annuity or some guaranteed lifetime income streams. Put it into something that's going to do more for them. Roth conversions are very top of mind right now with clients and potential clients. So talk to them about a Roth conversion, what it would look like. We have a couple of different annuities out there that are actually built for Roth conversions, where you put, let's say, $500,000 into this indexed annuity, and it comes with two different accounts. So you fund all of it right now, and then it'll siphon off a little bit of that money from that $500,000 every year over the next several years and do a Roth conversion within that annuity. One sale. You don't have to manage it. The company takes care of it on their own on an autopilot. And the client only gets a tax hit on a little portion of the money every single year. The strategies are endless, and I don't have enough time to go into all of them, but I wanted to share a few of them with you. Hey, we didn't get to be the #1 concierge FMO in the United States because we don't know what we're doing. We did it by helping agents with all of these kinds of strategies. We can help you make more sales. So give us a call. 800-200-9194, 800-200-9194. I'm Greg Skogsberg. We're TWH, the #1 concierge FMO in the United States since 1993. We look forward to talking to you.